Good morning, everyone. Last week was really remarkable. So much action to go nowhere. We had tremendous volatility in bonds in particular, but also stocks and currencies. Yet, at the end of the week, there was relatively little change from a week earlier. So what calmed the market? Comments from several ECB members, I think, convinced the market that the ECB is indeed moving towards some approximation of quantitative easing in the not-too-distant future, although some members of the ECB Council clearly aren't that happy about it. Meanwhile, things calmed down in Greece. The U.S. Fed speak saw some measure of mean reversion, too, following Bullard's surprising suggestion that the Fed shouldn't end quantitative easing this month. The Wall Street Journal and the New York Times said it was unlikely to happen. And even the dovish Boston Fed President Rosenkranz repeated his forecast that rates will start to rise around the middle of next year. Combined with several better-than-expected U.S. economic indicators, this renewed expectations for the end of QE in the U.S. and brought a bid back to the dollar. Now, dollar-yen surged late Friday on a report that the government pension investment fund is likely to double its allocation to Japanese stocks. The assumption was that the news would send Tokyo stocks higher, and dollar-yen is positively correlated with the Tokyo stock market. Indeed, it worked exactly as expected, with Tokyo stocks jumping today. As for today's economic indicators, we already had the main one out. German PPI fell at an accelerating pace, indicating that the risk of deflation in the Eurozone is worsening, but this had little impact on the euro. The Eurozone's current account for August is also due out today. From Canada, wholesale trade sales for August are to be released. There are no major U.S. indicators coming out. The only speaker we have on the schedule for today, ECB Executive Board member Kur. On Friday, he called on Eurozone structures to speed up their structural reforms. As for the rest of the week, on Tuesday, China releases its third quarter GDP and retail sales and industrial production for September. The pace of growth is expected to decline a bit, which would corroborate the concerns about a global slowdown. The Australian dollar might weaken as a result of that. Also, the RBA releases the minutes of its October policy meeting. The statement accompanying that decision dropped the line that the exchange rate, quote, remains above most estimates of its fundamental value, unquote. Yet, it concluded the comment it included the comment that the rate, quote, remains high by historical standards, as they've said several times before. It's unlikely that the mints will show a different picture this time. Wednesday, there's a Bank of Canada meeting. They're expected to remain on hold at neutral. And also we get the minutes from the latest Bank of England meeting, which will show us whether they've softened their stance in response to softer data. Thursday, there's a Norges Bank meeting. Again, they're also expected to maintain their stance, their relatively loose stance in the case of the Norges Bank. And also we get the global PMIs. This is the first indicator of activity in October. China's PMI is expected to be unchanged, but the Eurozone is seen as lower, which may hurt the euro. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.